Hello, welcome to the weekly Forex Outlook here at xm.com. It's been a torrid week for stock markets where not even stellar earnings by Nvidia could lift sentiment or prevent Bitcoin from entering a bear market. Are receding Fed rate cut expectations to blame for all this? Is there anything on the horizon next week that could change things around? Helping me to decipher it all is senior market analyst Achilleas Georgolopoulos. So Achillea, it's been a very volatile week and not a particularly positive one as we head towards the long Thanksgiving holiday in the United States. What should we be watching for during this shortened trading week?
Yes, hi Rafi. As you mentioned, it's been a difficult week for risk assets. Equities in particular have been leading the sell-off, particularly the Nasdaq 100 index. As you pointed out, even Nvidia's strong result and the upbeat commentary from its CEO did not turn the tide around for risk sentiment, which means obviously that investors remain worried about AI valuations and their investment announcements, which have raised quite a few questions whether these are going to materialize. As you mentioned, similarly, cryptos under severe pressure. Bitcoin is around 32% from its recent peak, so in very negative territory. Going into next week, US data will be in focus. We have a resumption, obviously, of the official data. PCE for October and the US consumer confidence stand out. Why are these important? Because with the Fedspeak being quite hawkish, if we get a series of soft data, maybe there is a revival of the December rate cut expectations, which of course tends to support the risk appetite.
And what about the US dollar? Is it likely to extend its gains?
The currency market weakness has benefited the dollar, so it is posting gains across the board this week, with euro dollar at some stage even testing 115. If we have a combination of weaker US data, which of course supports December Fed rate cut expectation, a small improvement in risk appetite, and of course some positive developments on the geopolitical stage, so the Ukraine-Russia developments, then we could see the dollar losing its appeal. On the flip side, of course, if we get another round of trade tensions and a failure in the Ukraine-Russia negotiations, then the dollar will probably be boosted next week. As a reminder, of course, for our viewers, next week will be shortened due to the Thanksgiving holiday and, of course, Black Friday, where most US markets observe an early close, so liquidity might be scarce towards the second half of next week.
Indeed, but perhaps not so much over in the UK, where we're going to be getting the autumn budget. Chancellor Rachel Reeves hasn't been having a great time lately, and she has a tough balancing job on her hands. What can we expect from the budget, and how is the pound likely to react?
You're absolutely right. It's been a difficult period for the Labour government, and we have quite a few months of speculation about the measures. On Wednesday, Reeves is going to present the budget, and the big question mark is how many tax increases or the size of these tax increases that we're going to get. Gilt yields have been rising, the pound has been weakening, so it could be a critical moment on Wednesday, potentially a make or break moment. If Reeves announces aggressive tax increases, the market might react positively, but there are quite a few noises from Labour MPs that they would be very upset in that situation, which probably means that we might head into a government crisis, which obviously tends to weaken the pound. The flip side, we get a tax-light budget, so everything is awesome in the UK. Markets react negatively because they might consider that the labour market is not ready to take the difficult decisions. Again, we might see the pound underperforming the dollar, with the pound bears potentially targeting a move towards 127.
Okay, so potentially we are looking at a lose-lose situation. Let's see what's going to happen there. And finally, let's take a look at what's happening in Japan, because the government just announced a fiscal stimulus package of 21.3 trillion yen, yet we're no closer to a rate hike by the Bank of Japan. Is there anything on the agenda next week that could shape expectations?
The yen remains in disarray as Ueda, the governor of the BOJ, is still sending mixed messages about the timing of the next rate hike. And obviously, as you mentioned, Prime Minister announced a new stimulus plan, the largest one since 2022. Next week's calendar includes Tokyo CPI, which tends to be important. But even if that produces an upside surprise and again gets a boost, that will probably turn out to be short. The important one for next week is, of course, interventions. We have been having verbal interventions from the finance ministry as dollar yen has been climbing towards the 158 area. If there is another move higher, potentially towards 160, then actual intervention might come into play. Interestingly, next week, as we said, the latter part of the week is low liquidity. So if the BOJ feels that it needs to intervene, maybe next Thursday, Friday might be the best opportunity for them.
Well, we shall have to wait and see. Achilles, thank you so much. This was The Week Ahead here at xm.com.